Hello students, we are in the third part of the video on terms in accounting. Let's check out the terms that we will discuss in this video. Ninth term goods, 10th term stock, 11th term purchases, 12th term purchase return, 13th term sales and 14th term sales return. Let's check out the ninth term goods. Ninth term goods. Goods refer to physical items of trade. What is physical item of trade? That is items that the business is dealing with. What it buys and sells in the case of a trading company, or what it produces and sells in the case of a manufacturing company. So whatever the business buys and sells if it's a trading company, and whatever the business manufactures or produces and sells in the case of a manufacturing company, this is called goods. Goods are physical items of trade. Let's say, for example, an enterprise that deals with home appliances. Goods are washing machines, refrigerators, etc. In the case of a stationery shop, goods are paper, pencils, pens, notebooks, etc. Let's say there's a pizza outlet near your house. The goods for this pizza outlet is pizzas. Let's say there's a footwear showroom next to your house. What would be goods for the footwear showroom? Shoes. So whatever the business deals with, what it buys and sells or what it manufactures and sells, that is called goods. 10th term stock. Unsold goods held by the business is called stock. So previous term we learnt was goods. We learnt that goods is what the company deals with, what it buys and sells. So that's called goods. Now unsold goods, goods unsold still in the godown of the company, that is called stock. Now let's take an accounting period between 1st April 2023 to 31st March 2024. Now, unsold goods held by the business at the end of the accounting year. This is called closing stock. Stock at the close of the year. So at this point of time, on 31st March 2024, whatever's unsold goods, that's called closing stock. Unsold goods held by the business at the beginning of the accounting period, that is called opening stock. So on 1st April 2023, whatever was the unsold goods on this day, this will be called opening stock. At the end, it will be called closing stock. Now what we need to understand is that the closing stock of one year becomes the opening stock of the next year. So considering the next accounting period, which is from 1st April 2024 to 31st March 2025. On 1st April 2024, the closing stock of 31st March 2024 will be the opening stock on 1st April 2024. So the closing stock of one accounting period will become the opening stock of the next accounting period. Now, in the case of a trading concern, It buys and sells goods. So there will be only stock in trade in the case of a trading company. However, in the case of a manufacturing company, stock consists of stock of raw materials, stock of work in progress, and stock of finished goods. Semi-finished goods are referred to as work in progress. For example, in the case of a footwear manufacturing concern, the leather will be the stock of raw materials. Stock of leather will be called stock of raw materials. Semi-finished shoes will be called stock of work in progress, and completed shoes, shoes finished manufacturing, that is called stock of finished goods. So unsold goods which is held by the business is called stock. Unsold goods at the end of the accounting period is called closing stock. Unsold goods at the beginning of the accounting period will be called opening stock. Eleventh term, purchases. Purchases is the term used when goods are purchased for the purpose of resale, or when you purchase of raw materials for the manufacturing of goods. Now let's say a stationery shop purchases pens and pencils for the purpose of resale, then the term used is purchases. Let's say a footwear manufacturing company purchases leather for the purpose of manufacturing into shoes. Then when it purchases leather, the term used is purchases. Remember that when assets are purchased, it is not termed as purchases. Let's say the stationery shop purchases furniture for cupboards. The term used for the purchase of assets is not purchases. Only when there is purchase of goods meant for the purpose of resale, the term used is purchases. There are two kinds of purchases. One is called cash purchase and the other is called credit purchase. In the case of cash purchase, cash is paid immediately, then it is called cash purchases. And in the case of credit purchases, when cash is promised to be paid later on, it is called credit purchases. Now let's say A purchases goods from B. For rupees 50,000. If A pays rupees 50,000 to B immediately, then you call it a cash purchase. But if A tells B, I will pay you cash at a later date, then we call it credit purchases. So what is purchases? It is a term which is used when goods are purchased for the purpose of resale. Remember, when assets are purchased for the purpose of use in business, we do not use the term purchases. We can also use the term purchases when we purchase raw material to be used in future for the manufacturing of goods. 12th term, purchase returns or returns outwards. When goods purchased are returned, why? Because it is defective or it is not according to the specifications, then it is called purchase returns or returns outwards. So we said the term purchases is used when goods are purchased for the purpose of resale. Now the purchase of the goods finds that the goods purchased are defective, then he will return what has been purchased. And in this situation, the term used is purchases returns or returns outwards. Thirteenth term, sales. This is the term used when goods are sold. So when the stationery shop sells pens and notebooks, then the term used is sales. Sales are of two types, cash sales and credit sales. When cash is received immediately, then we call it cash sales. And when cash is not received immediately, it is called credit sales. Let's say the stationery shop sells goods to X rupees 5,000. Now, if stationery shop receives the rupees 5,000 from X immediately, then we refer to it as cash sales. However, X does not pay the money immediately and promises to pay the stationery shop at a later date, then it is called credit sales. So, sales is the term used when goods are sold. 14th term, sales returns or returns inwards. When goods are returned by the purchaser, why? Because it's defective or not according to specifications, then it is called sales returns or returns inwards. So in the earlier example where the stationery shop sells goods of rupees 5,000 to X, if X returns the goods saying they are defective or not according to his specifications, then it is called sales return or returns inwards. So we learnt a few more terms in this video. The rest of the terms we'll continue to learn in the successive videos.